If you have any kind of financial link to India, there's one question you absolutely have to get your head around. And you might be surprised to hear it has nothing to do with your citizenship. It's actually something way more basic, and it shapes your entire tax situation. So let's break it down.
So, what's the magic ingredient here? Is it the passport you carry, or is it about your physical presence in the country? Now, a lot of people assume it's all about citizenship, but India's tax law has a much more logical and, frankly, a much smarter approach. Once you see it, it all just clicks.
And here is the big reveal. It's your residential status. The Indian Income Tax Act of 1961 is crystal clear on this. This is the absolute key to your tax liability. So you can pretty much forget about your passport for a second. Your residential status is what truly matters. So the next big question is, how on earth do you figure out what your status is?
Well, that brings us right to the residency tests. See, before we can understand what income gets taxed, we first have to understand how the law categorizes you. And you know what? It all comes down to one simple thing: counting the days you spend in the country.
Now, this isn't just some vague guideline. It's written directly into the law. Section 6 of the Income Tax Act lays out the exact conditions for figuring this out. So let's crack open the rule book and see exactly how it works.
It really just boils down to two simple tests. First up, the 182-day rule. Were you physically in India for at least 182 days during the financial year? If the answer is yes, boom, you're a resident. It's that straightforward. If not, don't worry, we move on to the second test. Were you in India for at least 60 days in that year? And have you been in the country for a grand total of 365 days over the last 4 years? If you tick both those boxes, you're also considered a resident.
But you might be thinking, what if you're an Indian citizen who's just visiting family, or you left the country for a job overseas? Well, the law isn't totally rigid. It has you covered. In these specific cases, that 60-day rule gets extended, giving you a lot more breathing room before you're considered a resident. It's a really practical exception that just gets the realities of a globalized world. And this right here, this really shows you the logic behind the law. It's all about substance over form. For a person, it's about physical presence, literally, boots on the ground. But for a company, it's about its place of effective management, or POEM. In other words, where are the real decisions being made? Where's the company's brain? That's what decides a company's residency, not just some mailing address on a registration form.
Okay, so now that we get how residency is decided, let's get to the juicy part, why it matters so much. Your residency status completely changes the scope of what you owe tax on in India. Let's dive into that in part 2.
This slide right here, this is the whole ball game. If you're a resident, your entire global income, everything you earn anywhere in the world, is on the table for Indian tax. But if you're a non-resident, you only pay tax on your Indian-sourced income. And then you've got this interesting middle category, not ordinarily resident. Think of it as a kind of hybrid status, a buffer zone. It's for someone who might have lived abroad for years, but is now spending enough time in India to be a resident. They'll pay tax on their Indian income plus any foreign income from a business they control from India, but not on their other foreign investments. The financial difference between these categories can be absolutely massive.
And now for what I think is the most fascinating part of India's tax law, the deemed income rule. This is where things get really clever. What happens when your income has a connection to India, even if you weren't paid there or didn't physically receive the money there? Let's find out.
This is where the law casts a very, very wide net. Section 9 introduces this powerful idea of income that is deemed to accrue or rise in India. It's a tool that basically lets tax authorities look past the surface of a transaction and focus on its real economic connection to the country.
One of the main triggers for this is something called a business connection. Now, we're not just talking about having an office in India. It's about having a real, substantial economic link. For instance, if you have an agent in India who is actually signing contracts and closing deals for you, or if you're keeping a stock of goods in India to sell from, well, you can have a business connection that makes your income taxable.
Let's make this super concrete with some real-world examples. Working in India, even for a short time, your salary is considered Indian income even if your company pays it into a bank account back home. Did you get dividends from an Indian company? That's Indian income, doesn't matter where you are. Royalties for using your patent in India? You guessed it. Sold a property in Mumbai? Definitely. See the pattern? It's all about the source, the economic link, not where your wallet happens to be.
So, what is the bottom line here? When you strip it all away, it's pretty simple. India's tax system is built on the idea of economic connection, not nationality. Your passport just doesn't matter nearly as much as your financial and physical ties to the country.
So if you're trying to figure out your tax situation in India, don't start by looking at your passport. Start with your calendar. The number of days you spend in the country, that's the very first piece of the puzzle. That one simple fact kicks off a chain reaction that determines your status, which in turn defines your entire taxable world.
And the law is not standing still, it's evolving. This concept of a significant economic presence is a total game changer for digital businesses, online creators, you name it. It means that even without a single desk or employee in India, you could still be on the hook for taxes if you have a significant economic link to the country, like a huge user base or a lot of revenue from Indian customers. It's a clear signal that the very definition of presence is being updated for the digital age.
And that really leaves us with a final massive thought. In a world where a business can reach millions of people without ever setting foot in their country and work can be done from literally anywhere, what does presence even mean anymore? India is already wrestling with this, but it's a question that every single country is going to have to answer as they try to keep their tax laws from becoming obsolete in the 21st century.